One thing we talk about is real estate, and obviously mortgage rates are a huge part of that conversation. They have remained relatively steady, especially for these months. And of course, there's big questions about what happens if they climb back towards that 7% that we saw at some point. And we'll talk here with the professionals who know a thing or two about what that may look like and the possibility of not just having a 30-year mortgage rate, but also what are adjustable rates. They are known as ARMs, and that could be impacting how you buy, how you sell, and what else we could talk about. Of course, with us here, we've got none other than President at TTR Sotheby's International Realty for his group, Corey Burr, with us here. So good to have you with us.
Hi, Marina.
Hi.
Happy 4th. Happy
4th to you as well. Rates, such a huge part of the conversation, especially for people who may be tepid on getting in on the game, seeing how these rates keep climbing. What is your conversation with those people who you're thinking, do I want to get in or not?
So what better way to celebrate the 4th of July with buying a piece of the American dream and getting a house as inexpensively as possible? And what I mean by that is an adjustable rate mortgage. The 30-year fixed is at about 6% right now. A 7-year ARM is about 5 5/8, and a 5-year ARM is 5 3/8. There's a savings on those adjustable rate mortgages of about $150 on the 7-year and $250 a month on the 5-year. So for people who are putting together every penny to afford a property, this is a great strategy. Now, it comes with a little bit more risk because it's not a stable principal and interest payment for 30 years. But if somebody thinks that there's a good chance that they can refinance in the next 5 to 7 years, or if they're going to move within 5 to 7 years, it's a very good alternative to the 30-year fixed.
Is there the thought right now that rates will continue climbing and that there may be an opportunity to refinance down the road, or is there a thought that rates are going to go down? So if you are in an ARM, you will be able to refinance. Where are we in the thought? Because I know this is like reading tea leaves, but what are the people in the industry saying?
So it is like crystal ball, but with oil having dropped from $112 to $68 where it is today, that's going to flow through the whole economy, and I think that's going to put less pressure on interest rates in the next 3 and 6 months. I also think that that's going to make the inflation numbers much more palatable, and that's going to affect interest rates to the benefit of buyers and sellers and the real estate market.
How do we feel about where we're at right now? You had Juneteenth, Father's Day, 4th of July. I know it's the summer. We talk about kind of like where the market stands. The spring market is where it's hot. Are we still at a high point of the market given all these holidays?
So the summer market is not as hot as the spring market, but it's still a very good market. It's much better than November, December, and January. And a lot of people want to get into their new houses before the children start the school year. So even though it might feel like it's a little bit quieter than the spring, it's still a very good time to sell. Now for sellers, they've got a seller's market for their house for the first 2 to 3 weeks that it's on the market. But thereafter, it becomes a buyer's market. And so they have to be very cognizant that they have one chance to make a big splash and get those buyers interested in their property.
And is that what you're hinting at? Is that generally speaking how you price your home?
Ideally, yes. You would price it very reasonably so that people come in and instead of saying it's a beautiful home, but I'll watch it, they say it's a beautiful home and I'm going to move heaven and earth to buy it.
Okay. And do you think that there's an opportunity? Because I know in the pandemic we saw people fighting for things, going way over asking, waiving contingencies. If you underprice, say, if you think, okay, my property's worth X, but I'm going to go below it, does it generate that sort of competition amongst other buyers?
It could, but that's kind of a dangerous strategy.
Okay.
Because we don't have the crazy buyer demand like we had during COVID. So a seller might find if they purposefully underprice that only one buyer comes through the door, and they could have done better had they priced it a little bit more aggressively.
So they may have to sell to that sole buyer if they really want to get this property offloaded here. How long are these properties sitting on the market right now? What's the average look like?
The average is about a month throughout the whole market, and that's pretty good. It's enough so that buyers understand that there might be competition on certain houses, and it's good enough so that sellers understand that there's a good chance that they're going to sell their property.
All right, Corey Burr giving us the good tips here if you want to get in the market. So good to see you. Happy 4th.
Happy 4th.
We'll be right back.